$100,000. Sounds like a huge number, right? But do you know that if you earn $100,000 in Canada, a big chunk of that salary actually never reaches your bank account because you have to pay that in taxes. So what's up YouTube, it's Shivansh here and welcome back to my channel. Now understanding the tax system in Canada is very important for you because if you are a new immigrant or an international student who's planning to come to Canada and work in Canada, then this will give you an idea about how much money you will get in your bank account after deducting all the taxes, and you can compare that with my cost of living in Canada video to understand exactly how much money do you need in order to survive and to live a good life in Canada. So in this video, I will tell you exactly how much taxes you have to pay if you earn $100,000 in Canada, and I will also tell you how you can calculate your after-tax salary. So it doesn't really matter if you earn more or less than $100,000, you will be able to calculate your taxes based on your exact salary. And by the end of this video, I will also tell you how you can choose not to pay some taxes every single year, which will lead to even more income in your bank account at the end of the day, and also how you can do some things to reduce your income tax to get into a lower income tax bracket, which is actually pretty cool. So all this useful information is coming up in this video. Make sure to give this video a big thumbs up and subscribe to my channel to watch more such videos about studying and working in Canada. And with that, let's start this video. So first of all, let's start by talking about the different types of income taxes in Canada and what are all the different things that are deducted from your salary before you receive your paycheck in Canada or before your salary gets deposited into your bank account. So there are mainly two types of income taxes in Canada. The first one is the federal income tax, which is actually the same for all the people living in Canada. So it doesn't matter if you live in Alberta, Ontario or British Columbia, you will be paying the exact same amount of federal income tax on the exact same salary. The second one is the provincial income tax, which will be different depending on which exact province you live in. So if you earn any income in Canada, you will have to pay both the federal income tax as well as the provincial income tax. Now, in addition to these taxes, you will also have to pay some amount towards your employment insurance and also towards your Canada Pension Plan or CPP. Now, the employment insurance is paid so that, let's say if you lose your job tomorrow, or if there's a situation where you're not able to work for an extended amount of time, then the government will actually pay you some money from your employment insurance that you have paid over the years. And CPP or Canada Pension Plan is the amount that you contribute towards your retirement or your pension. And this is an example of how your paycheck will look like when you start earning in Canada. On the left side, you can see that this person has earned $2,000 for this paycheck. Now this is just their pre-tax income or their gross income. And on the right side, you can see all the different taxes and deductions. So $92.34 for CPP or Canada Pension Plan, $32.36 for their EI or employment insurance, $217.7 for their federal tax, and $111.94 for their provincial income tax. So after deducting all the different taxes, this person will receive approximately $1,545 on a gross income of $2,000. Okay, now let's talk about how these taxes are calculated by looking at an example of how much income tax you will have to pay if you earn $100,000 in Canada. So basically, the tax system in Canada is a progressive tax system based on income slabs, which means that the more income you earn, the more tax you have to pay based on the slab that your income falls into. It's better if you look at an example to understand this. So on the screen, you can see the different types of tax brackets that exist in Canada. And let's say you earn $100,000, which is actually a pretty decent salary for Canada. And I'm sure a lot of you guys will be wanting to earn $100,000 when you come to Canada or when you start working in Canada. Now, since 100,000 falls between 98,000 to 151,000, so that will mean that you will fall into the third category or the third slab, and you will be taxed at 26%, which is a lot, right? But that is not correct. Since the Canadian tax system is a progressive tax system, you will only have to pay 15% tax on the first $49,020. So out of your salary of $100,000, you will only have to pay 15% tax on the first $49,020, which comes out to be $7,353. So now you've paid taxes on the first $49,020. Now let's talk about the remaining amount. So for the remaining part of your salary between $49,000 and $21 all the way to $98,000, $98,040, you will be in the second tax bracket and you will have to pay 20.5% tax, which comes out to be around $10,038. At this point, now you have already paid your taxes for the first $98,040 of your salary. So out of $100,000, you've already paid taxes for the $98,040, and for the remaining amount of $1,960, you will fall into the third slab or the third category and you will be taxed at 26%, which comes out to be around $511. So you see, you only have to pay 26% tax on $1,960 and not on your total salary of $100,000, which is actually pretty good. So in total, your federal tax on a salary of $100,000 will be $7,353 plus $10,048 plus $510, which comes out to be around $17,911. Now keep in mind, this is just the federal income tax. On top of this, you will also have to pay your provincial income tax, which will also be calculated in a similar progressive manner, and the provincial income tax brackets will depend on which exact province you live in. This example is for the provincial tax brackets in Ontario. So if you live in Ontario and you have a salary of $100,000, your provincial income tax comes out to be around $7,495. So your total income tax on a salary of $100,000 will be around $25,406. And on top of this, you will also have to pay for your CPP and your employment insurance, which will bring your total tax deduction to be around $29,986, or you can say almost $30,000. So if you earn a salary of $100,000 in Canada, in Ontario, then you will only end up with $70,000 in your bank account. Now the question is, how can you figure out how much tax do you have to pay for your specific salary? Now I know that this can be a very confusing calculation, but don't worry, you don't have to do all this by yourself. I have a very simple solution for you. All you have to do is go to ca.talent.com and then click on tax calculator. Next, you have to enter your salary. So let's say $60,000, and then you have to choose the province that you live in. So let's say I'm entering Alberta for now, and then this calculator will give you a very good approximation of how much tax you will have to pay on a salary of $60,000 in Alberta. You will also get a breakdown of all the different taxes and deductions. Now this is a very powerful tool, and I always use this website to check approximately how my taxes will change if my salary increases, especially just before starting a new job. So you should definitely give this one a try. Okay, so now that you know how to calculate your taxes, let me give you some secret tips on how to save money in Canada. Just kidding, these tips are not really secret, but I see that a lot of people don't make use of these tools, which can help reduce your taxes significantly in Canada. Now to save some taxes in Canada, you can contribute towards your RRSP or your registered retirement savings plan. Now what happens is, let's say your salary is $60,000 and you contribute $5,000 towards your RRSP, then you will only be taxed on your salary minus the amount that you've contributed towards your RRSP. So in this case, since you've contributed $5,000 to your RRSP and your salary was $60,000, but you will only be taxed as if your salary was $55,000. So this is a win-win situation for you because you are saving and investing your $5,000 and you are not even being taxed for it. But keep in mind that when you withdraw from your RRSP, you will have to pay taxes, but you can defer that to your retirement. So with your RRSP, you can save and invest your money today and you can pay your taxes later in your retirement. Contributing to your RRSP can also help you get into a lower tax bracket. So if we go back to our $100,000 example, you might remember that you will have to pay 26% tax on the remaining $1,960 because that would fall into the third category or the third tax bracket. If you remember correctly, on the last $1,960 out of the $100,000 salary, you will have to pay $511 in taxes. But you can save those $511 by just contributing $2,000 into your RRSP account, because then you will fall into the second tax bracket and you will only be taxed as if your salary was $98,000 instead of $100,000. So I hope now you guys understand the tax system in Canada, how you can calculate your taxes and how you can use some tools to reduce your income tax amount. So I hope you guys found this video to be useful. If you have any questions, then feel free to comment below, or you can also reach out to me on Instagram at Singla119 and I'll be happy to answer all your questions. Make sure to give this video a big thumbs up and also subscribe to my channel to watch more such videos about studying and working in Canada, and I'll see you guys in the next video.